Sometime last year, I did an earlier episode on why I don't invest for passive income anymore. And I think I had a sequel to it, right? I talk about why I don't invest for dividends and probably REITs. So let's start with the dividends, okay? Today's video, why I don't invest for dividends. And there was a time where I really invested for dividends. And I fully understand from a dividend investor's point of view, what do they really enjoy or what do they look at. But I felt that in my 30s, I generally don't take the same view anymore. Maybe because I'm exposed to more markets and more information and more education. Now in Singapore, dividends investing is very popular because even the top few stocks in the Straits Times Index of our Singapore exchange are highly focused on giving out dividends to their shareholders. And for those of you who are quite new to dividends, what are dividends really? Dividends are actually the profits that are paid out of the company's balance sheet when they had made a profit. So it comes out of their cash balance. So that's a simplistic way of looking at dividends. You are transferring the retained earnings from the company to become your earnings as a investor shareholder. So the criteria of dividends investing basically means that firstly, the company must be profitable, and secondly, the company must have free cash flow to pay out the dividends. Of course, there are companies which are not profitable that pays out dividends, then you will probably know that it is not a very good dividend paying stock. Now, the fundamental reason why I don't invest for dividends anymore in my 30s is because I realized that when you are investing for dividends, you are investing for income. And that means you need the regular cash flow, be it monthly, quarterly, or yearly, depending on how frequent your cash payouts from the distributions or the dividends. So my personal take on this is that I do not need all these distributions, dividends coming in at regular periods because I have incomes from other streams, be it from my job, be it from my side hustles, be it from my other investments, okay, or my business. I do not really need all these dividend income paying companies to pay me dividends because once they pay me the dividends, I still have to use all this excess cash to go and reinvest back to the market. So that is double work, manual work. And if you are a business owner, you run your own business, I'm very sure you understand the fact that you can also pay out dividends from your own company. And hence, that form of dividends is actually the same nature of what your invested dividend companies are paying you, just that now it is coming out from your own business. But before I go even deeper into dividend investing, you can join us at over 22,000 members in the Honey Money SG Telegram if you want to learn more about investing. I will share a bit about my current reality and situation first. I am earning income from my two businesses, Honey Money SG and Solo Biz SG. One as a content marketing company, the other as a consultancy and educational company. So these two businesses will bring in cash flow regularly and I will get my income source from them. So you can consider this source of income from employment, self-employment or business, whatever you call it, but it is considered my active income because I need to work to get it. Now, since I'm already getting regular cash flow and income from my active income sources, I do not need regular cash flows from my investments. In turn, we call it passive income. Okay, because the company will pay out the dividends, right, when they make money and then they have excess cash, they pay out to shareholders. That's considered kind of passive income. And I learned this practice from Sao Chun, who I've interviewed earlier, right? Be active in your active income and be passive in your passive income. That's why I'm focusing more of my active hours on my active income. Then my passive income, I just let it take a passive nature. So moving on to why dividends don't fit me and my current stage of life in my 30s is because I really don't need the cash flow. And if I don't need the cash flow, what happens? By company paying out the dividends, it breaks the compounding nature. Instead of keeping the money, the cash within the company to reinvest back into their business, whether for R&D for better products or to reduce their own operating expenses or to reduce headcount and invest in AI, all these are not the company reinvesting their own profits back. And they're just paying out all this cash to shareholders because they are no longer growing their businesses. And when all these dividends are paid to the shareholders, i.e. myself, the investors, what am I going to do with it? I have to think of where to deploy this money, correct? I need to look for the next best investments, or I could just increase my positions on the existing company, which also means that I'm reinvesting back into the business. But the only difference is that it is administrative and I have to do it myself manually. And the company, when they pay dividends, they also have administrative costs. I'm sure of it, of legal compliance and finance to MAS reporting, all this. All these are additional admin costs that are part of the middleman. So the difference between dividend paying companies and growth companies comes to this point where growth companies, they will just reinvest the profits back to the company and they will do the work and reinvest all these profits for me instead of me reinvesting the cash back into the dividend paying company stock. So as a business owner, my mindset is quite different. If I really want more income, what I need to do for my own business is that I reinvest my own profits back to my own business, be it Honey Money SG or Solo Biz SG. All this will generate me more income compared to the stock market because it is what I can control. My business operations, managing my clients, and potential networks that will grow the business. All these I can reinvest back. And the return on investment or ROI will be much higher than that 4 to 6% dividend yield that is coming from all these dividend paying stock companies. Now, whether you are into dividend investing, growth investing, or a balanced portfolio or both, I would really recommend you to use Interactive Brokers because it is my most preferred broker with the low foreign exchange fees and also a wide market across the world. So I've been using Interactive Brokers for more than 5 years now. And even if you have an existing Interactive Brokers account, you can support this channel by clicking on this Interactive Brokers link or scanning the IBKR QR code right here. Every click counts to support my channel. Thank you very much for those who have clicked or scanned the QR code. And I want to be very clear on this concept of my investment portfolio. It is a wealth machine. It is not an ATM, okay, not an automated teller machine, which means I want to grow the capital, I want to grow the AUM of this portfolio. Okay, I want to generate more wealth to make it a bigger portfolio. I do not want to keep withdrawing from this ATM. Like every month, every quarter, I need to take out cash flow just for me to feel good about myself receiving all this cash and then sharing it on social media. In fact, since I'm not at retirement age yet, I don't even plan to sell any shares. I'll let them compound over time for the long term. And I don't want to break this compounding habit. And when we talk about retirement, I don't think I will ever go into the full retirement mode. I would prefer a semi-retirement lifestyle where sometimes I just take some side projects like consulting or coaching to help other people in their earlier stages of life. So I will probably not retire 100% and do nothing because I'm always excited about running businesses, creating content, and consulting others to help them in their own ways. That will also mean that I have income streams coming outside of the stock market, which means that I do not need to take money out of the stock market. But let's not ignore the fact that I am against dividend investing. I'm just saying dividend investing is not suitable for me, but why is it suitable for a lot of people, especially in Singapore? Because they have reached a stage where dividends is a very important source of cash flow or income. If you are closer to retirement and you prefer a predictable cash flow, then dividends makes a total sense. And if you want stability, all these dividend stocks like Singapore banks or even REITs can handle it and produce regular cash flow distributions to you. And I understand that having that regular cash flow for that peace of mind is very soothing, especially when stock price can be quite volatile. During all these market turbulent times, you still continue to receive your dividends. I know that feeling feels very good and very comfortable. So as a business owner, I think from a different point of view. Like for example, in SoloBiz, I shared that you can also pay out the profits and the cash from your company to yourself as a form of dividends to the business owner slash shareholder. Because there are three main ways to pay yourself. Number one, salary. Number two, director fees. And number three, dividends. And dividends are not taxed in Singapore. That will also mean I don't have to depend on other companies to pay their dividends to me. I can depend on my own cash generating businesses to pay their own dividends to me. Of course, a corporate tax apply, you have to assess whether dividend paying is good for you or salary is good for you or the director fees is good for you. We'll go through all these structures in SoloBiz. So if you want to watch a free preview of Shift, our flagship education program at SoloBiz, then you can refer to the link in the description. Okay, after all I said about dividends not suitable for me at this current age, I still do believe that dividends will at one point in time be suitable for me, especially when I approach retirement age, probably in late 50s, early 60s, that period before the CPF life kicks in. Once I slow down from my full-time business and entrepreneurship journey, I may start to consider allocating a portion of my current portfolio to dividend-paying stocks so that it can supplement the cash flow. But as of the current stage in my 30s, I really want to focus on growing the capital, growing the assets under management for my growth portfolio. And if I have any additional cash flow coming from a business, I will then reinvest all this passively into the stock market. So to be clear again, I am not against dividend investing. I'm just sharing why dividend investing isn't suitable for my current age. But I understand that at one point, it may be very suitable for me or for you, depending on your life stage. If I really need additional cash flow, I will just issue dividends out of my own company and business. For my own investment portfolio, I will just let it compound via growth and long-term investing returns. So I'll just invest it passively, dollar cost average through a regular savings plan, and just let it compound over time for the long term. It's like watching paint dry. It will take a very long time, but I keep it passive. I don't actively manage it. So if there is a takeaway from this video, I'm not saying that dividends are bad. I'm just saying that you need to reassess whether dividend investing strategy is for you at your current stage of life. Because like myself, I started with dividend investing because of the passive income nature, but I felt that it can grow much faster in growth investing and building your capital and AUM over the years. If you still prefer steady cash flow over growth investing, no problem. Just do what you enjoy. Most importantly, don't keep going in and out of the market. That is the worst. Because remember, time in the market is better than timing the market. And in my next episode, I'll probably talk about the REITs, why I don't invest in REITs anymore. And you can comment on REIT plus one if you want to watch that video, because I think it will generate quite a few different opposing views. And meanwhile, if you're into dividend investing, I'm very sure you're also into passive income, right? So here's the video I did earlier on why I don't chase for passive income returns anymore. And you can watch it right here.